So let's take a look at Riot blockchain now. So Riot blockchain in June, Riot produced 421 BTC, which is great. As of June 30th, Riot held approximately 6,654 BTC. In June, Riot sold about 300 BTC, generating net proceeds of approximately 6.2 million. And Riot currently has a deployed fleet of 42,455 miners with a hash rate capacity of 4.4 exahash per second. So that is actually lower than in May. But we'll get into it here. They actually explain what's happening with that a little bit. And that obviously has affected the numbers that I have for them. During the month of June, we achieved full operation of all 23,000 S19 series miners in the first immersion cooled building at our Winston facility, Building F. So that's fantastic. They're going to obviously get some incremental hash rate increases from that. We don't know whether it's going to be 20%, 25, 30%. We'll have to see and wait until we get some data from them on that. That will obviously help them out as well. And in June, they had to curtail their energy consumption for a total of 8,648 megawatts. So we did lower their days that they were mining in June as well, based on that. And then mining deployment and shipment updates. So Riot announces that it has begun transitioning all of its miners hosted at CoinMint LLC's Messina, New York facility. The transition will consist of both a relocation of the miners to the company's Winston facility and by way of a miner swap agreement with Riot, which Riot has entered into with another Bitcoin mining counterparty. This initiative is underway and approximately 5,700 miners are currently offline and temporarily not counted in the deployed fleet figure. So that's obviously having an impact on the production in June. And we'll take a look at it here shortly. The good part is obviously as they are in the process of being redeployed, it is expected that the company will ship the balance of its S19 miner fleet presently at CoinMint to the Winston facility in July. So that'll obviously bump them back up, hopefully. And as a result of the relocation of miners, the company expects to further reduce its cost of production through lower power costs and by eliminating all third-party hosting fees on its hosted mining fleet, which is also really good. So, they're going to really reduce their electricity usage and obviously for the hosting fees on that as well. So that's obviously more money in their pocket. So that's obviously a good thing as well in that one. And estimated hash rate growth. So by January 2023, Riot still anticipates a total self-mining hash rate capacity of 12.5 exahash, assuming full deployment of approximately 115,458 miners ASICs, but excluding any potential incremental productivity gains from the company's utilization of the 200 megawatt immersion cooling infrastructure, which, like I said, we don't know exactly where we're going to end up with 25% or 30% increases in hash rate on those miners. All right, and let's get into the numbers. I think that was it. There was nothing else that I wanted to cover. So let's take a look at Riot here. And Riot is right there. So Riot obviously has right now 135 million shares outstanding. Let me zoom this in for you guys a little bit more. 135 million shares outstanding. Stock price is about 473 right now. It went down a little bit today to 453. So that's a market cap about 640 million. Their current hash rate is about 4.9, and that's incorrect. That's let me see here. It's 4.2. 4.9 is going to possibly be there. Where am I at? 4.4. Is that correct? Are they at 4.4? Did I make a mistake here? Let's see. Double check just to make sure that we are at 4.4. Okay. So they are at 4.4. I'm using the end all hash rate here at the bottom. So that's where that's pulling it in. So total is going to be 12.6. They're saying 12.5. So that's obviously a little bit of a decrease from where they stated they were going to be at. But that basically represents they're at about 38.5 or so % operational right now. Average hash rate per miner is about 104 terahashes right now, which is pretty good. And we still obviously have a long ways to go before they are fully installed, but not too far off. Obviously, if they're saying they're going to be by the end of the year, that's going to be a lot of miners that have to get installed in that time frame. Hodl position is obviously 6,654. That's valued at 132 million right now. It's 20% of their market cap right now, and each share is about 98 cents worth of hodl in it. Looking at their BTC production, it has been a downward trend here for the last couple of months, which isn't good. So if we look here, they peaked at 511 in March. In April, they had 508, May 466, and in June 421. So hopefully they can reverse this trend. And even if they had the one extra day in June here that you had in May, they still wouldn't have beaten May's production, unfortunately. And that obviously dropped them down to about a 0.0956 Bitcoins per petahash compared to the 0.1012 that was in May, which was obviously better. I think April was probably, no, not April. March was their best month other than June here, which was at 0.13. That was an even better month there for them. But looking at their BTC hodl for May was 6,533. Now it's 6,654. So they sold 300 miners, and I'm using the price. Probably should be using like 23,000. They said 6.3 million or something like that they made from it. I'm off a little bit on this one, but that doesn't really matter. We're just looking at it to see what they actually sold or if they sold anything at all on that. So that works out that way. Let's take a look at the miners that we did install here and which ones we got rid of or turned off, basically. So if we look at June here, I basically turned off these miners here, the 5,000 or so miners at 110 petahash, roughly. So that got us down to where we needed to be. And then we also installed these miners here, the 3,500 and 4,400 of the 90 terahash miners installed here. And that was it. And that got us to the number which was over here, the 8.4 million basically revenue based on Bitcoin's ending price in June. And let's see, where was June? June is here. So if we go down here, we're at 8.4 right now. And we did drop them down, obviously, to 23 days instead of 30 days because they did say that they were shutting down for X, but they didn't include the days, they included the watts. So that got them down to 23 in order for all of this to make sense. And if we look at institutions here, we're also seeing institutions growing for them as well. So in July, they increased their institutions by 3. Number of shares also increased. Percent owned decreased. I wonder if it's based on issuance of shares, whether there were more shares added into the circulation here. But we still have 2 strong buy ratings, 7 buy ratings, 1 hold rating. And the price has come down a little bit. Target high of 42 compared to 50 that we had, and the average down to 21.50 from 31.50, and the low to 14 from $20. So we're kind of seeing this across the board for the most part on the miners. You're getting lower ratings or price targets, if you want to look at it that way. And right now we're using obviously the PE to 20. We're looking at approximately combined total revenue for the last 4 quarters, about 187 million, and we're using the 75% net income from gross revenue of 140 to get to approximately $20.78 at a PE 20. Right now, they're not at nowhere near that. They are at, if we go down, I can't even go. So they're about a 4, I would say, 4 to maybe like a 3.5 PE right now on earnings. But they could easily obviously get to 20, I would think, especially with how high their hash rate's going to be and the incremental increase from their immersion cooling as well. So that's going to help them out. So based on that, I would say $20 is definitely doable. The analysts are saying $42. You would be looking at, to get to 42, a PE of, what would that be? Close to 40. Yeah, a PE of 40 would get them to about 40 based on that. So I think anywhere $20 is, I would think, be a conservative bet that they could probably get to that. And if Bitcoin pumps, they could obviously go a lot higher than that. But 20 is kind of the target where we're looking at right now on it. All right, so I think that we covered pretty much everything here that we wanted to cover in Riot. Obviously they're got some challenges. They're moving the miners over. They're also curtailing their usage to help out the electrical grid. So that's obviously affected the amount that they're mining. So we'll see if they can improve on that going forward. And so it was an okay month. It wasn't a great month. Obviously, a great month would have been BTC production rising, but hopefully once they get more miners installed, that will definitely improve going forward. So hopefully we're at the low end here of where they are with production. All right, so that's it for Riot.